There is one industry that Warren Buffett and Charlie Munger always loved. They owned it for more than 30 years, and it was a great investment, creating tens of billions of dollars in profits. Today, Buffett still has 13% of his portfolio invested into stocks that are representing this industry. But on the other hand, most of Wall Street analysts seem to hate the oil industry. So let's discover what Warren Buffett truly thinks of oil, what stocks he owns, and what he predicts for the future of the oil industry. Warren Buffett has a unique style of investing. Firstly, because he only invests in high-quality stocks. He buys companies that have been around forever and that will probably still be around in 50 years.
By definition, a great company is one that's going to remain great for 30 years. If it's going to be a great company for 3 years, it ain't a great company.
He owns stocks like Coca-Cola, American Express, or Apple. The second reason why his style is unique is because he doesn't own many stocks. He has around 90% of his portfolio invested in only 10 stocks.
If you really know businesses, you probably shouldn't own more than 6 of them. I mean, if you can identify 6 wonderful businesses, that is all the diversification you need, and you're going to make a lot of money.
Moreover, he does this without taking much risk. So, what is Warren Buffett's secret? Well, Warren Buffett is notorious for only investing in industries that he fully understands.
Different people understand different businesses, and the important thing is to know which ones you do understand and when you're operating within what I call your circle of competence.
For instance, for his number one holding, Apple, he bought the stock after he understood a critical fact about consumers.
But if you talk to most people, if they have an iPhone and they have a second car, the second car costs them $30,000 or $35,000, and they were told that they never could have the iPhone again, or they could never have the second car again. They would give up the second car.
And when he finally finds such strong companies, he buys their stock with the intention to hold forever.
We're interested in owning a wonderful business forever.
And yet, Warren Buffett still invests in the oil industry, which seems to be slowly dying. And the main reason why this industry is slowing down is the government's plan to transition from fossil fuels to renewable energy. This is now called a climate emergency, and officials argue that any investments into growing the oil industry can be regarded as a climate disaster. And yet, Warren Buffett holds 2 oil stocks with a combined portfolio weight of 13% or more than $34 billion invested. The first one is Occidental Petroleum with $16 billion invested. Berkshire owns almost 30% of Occidental and has the option to buy more Occidental stock at a fixed price. One of the reasons why Warren Buffett is invested in Occidental is because it is the 4th largest oil producer in the United States.
We do very much like the Occidental position they have, and that's why we financed them when the oil market just totally collapsed, and then it changed around and we bought a lot of the common stock.
Moreover, Occidental is investing heavily into a new technology that could mitigate the environmental impact of its oil production. It is called carbon capture technology, and as the name suggests, it captures carbon dioxide directly from the atmosphere. This is a plan that Warren Buffett supports, as in the 2023 letter to shareholders, he makes it clear that he likes Occidental oil and gas holdings, as well as their leadership into the carbon capture initiatives. Still, Occidental is a volatile stock since its price fluctuates based on the price of oil and the company carries a significant amount of debt. The second oil stock that Warren Buffett owns, with a portfolio weight of 6.7%, is another US manufacturer, Chevron. Chevron is bigger than Occidental and it is the second largest crude oil and natural gas manufacturer in the United States. The company is extremely profitable, has low debt, and offers a dividend. But unlike Occidental, Chevron is a much bigger company which continues to pay dividends even during tough market conditions. And just like Occidental, Chevron also invests in the technology to capture carbon dioxide from the atmosphere and store it underground. So, is it possible that Warren Buffett knows something about the price of oil that the rest of us don't? Well, truth be told, he doesn't even try to predict the price of oil.
We still don't know what the price of oil is going to be next year. Nobody does.
Instead, he relies on the company's execution to minimize the risk. So even in a shrinking market, he can still find high-quality companies.
We always look at every stock as a business. We have no way, no attempt made to predict markets. We have no attempt made to pick stocks.
Lastly, he argues that oil will remain crucial for the global energy needs.
People that are on the extremes of both sides are a little nuts. I would hate to have all hydrocarbons banned in 3 years, or it wouldn't work. I think Chevron's benefited society in all kinds of ways, and I think it continues to do so, and I think we're going to need a lot of hydrocarbons for a long time, and we'll be very glad we've got them. But I do think that the world's moving away from them, too, and that could change.
To sum up, Occidental and Chevron continue to have strong financial performances while also paying dividends. They are positioning towards renewable energy, and Buffett believes that they are well positioned to have a successful transition while creating value for the shareholders. That was it from me. If you feel like you've learned anything of value or you want to see more videos like this one, please hit that like button and subscribe. By the way, the YouTube algorithm really believes that you would enjoy this next video.